Exhaustion gaps are very closely related to runaway gaps in that they take place while a trend move is already in play. The difference, however, is that while a runaway gap will continue a trend move, an exhaustion gap will end such a move. With an exhaustion gap, usually the highs are made within the first hour of trading on the day of the gap itself. Oftentimes they're made within the first 15 to 20 minutes of the day. On RGLD, there are a couple of examples of an exhaustion gap taking place. The first one is on July 15th, and prior to that move, we have several other forms of gaps. We have the breakaway gap taking place on the 11th, a runaway gap the next day, and this is then followed with an exhaustion gap on the following Tuesday. Unlike in the case of the runaway gap, where the closure of the gap itself served as a support zone, when the gap took place on the day of the exhaustion gap, the 14th, that closure of the gap itself did not hold. Instead, it broke through that zone and then continued lower for a number of days. This is very typical following an exhaustion gap. Either a congestion or a trading range takes place after the day of the exhaustion gap, or a pullback in price. Oftentimes it's a little bit of both. You can see that there's a pullback in price, but the pace or the momentum of the pullback is slower than the move higher was. A second exhaustion gap takes place on July 22nd. This looks a little bit like a runaway gap in that there was an initial breakaway gap heading into the previous day, followed by that second gap. Oftentimes, a secondary gap is more of a runaway gap, which is a continuation gap. However, in this case, the trend was a little bit more extended, there was a stronger upside surge, and the trend placement itself was not as ideal, heading into larger time frame resistance. The difference between a runaway gap and an exhaustion gap can often be more difficult to identify, so you have to be sure that you are taking other things into account. As with the previous exhaustion gap, when the gap closed, that level did not hold, and instead it broke through that zone and continued to pull back for several days. Following this initial pullback, there was a lot of congestion which took place that slowed the correction as compared to the larger upside move. Exhaustion gaps offer great opportunities to look for reversal patterns leading to the closure and continuation in the direction of the closure of the gap itself. Often the best momentum in this type of gap takes place in the morning, so you're usually going to have the best follow through as the gap closes, followed by a little bit of a slowdown in the momentum once that has already taken place. If you'd like to learn more about gap analysis, be sure to check out my website, ToniHansen.com, or go to www.tradingfrommainstreet.com. I can also be reached through my email at Toni@tradingfrommainstreet.com.